Welcome back for another weekly analysis. And this is the end of quarter one, and we're going into quarter two. And I want to go through briefly my trades from last week because after 2 weeks of being inactive, as none of my setups played out, last week was very active, and I just want to go through these trades briefly. Now, this first one, GBP Australian dollar. Now, I had this mapped out in my scenarios for the last 2 weeks in my weekly analysis. I want the price to come up above, make new highs, come back down, and you can see this rejection from the earlier previous Sunday open. I saw it closed above it, and I entered. And trade was going great. We went in drawdown at the start, came up to about 1.8, and this is why risk management is key. I would take this trade every day of the week. I had all my conferences, and it was a great trade. I have nothing against this trade, but you cannot be prepared for everything in the market. You have to be prepared for everything in the market, because as Larry Williams once said, even if you have a high probability trade, which is 85%, your next trade is just 50-50. And this is a perfect example of this. We went up to 1.8, and then we got a tweet from this guy, and you can see here, price went back down below. And what I found very interesting about this as well, you see, even with that manipulation, price could not close below this fixed value area high. But I was out of this trade, break even, and I didn't want to enter again because look at that big rejection candle. So any entry would have to be above that. So I left that trade alone, just break even. Now the next one, and this was the same time. This was New Zealand dollar, Australian dollar, and I actually talked about this in my previous video during the week. It's a CME pattern. We had consolidation when Trump had that tweet, manipulation. And what was key for me here, you can see the next candle goes below the Sunday open. So that was telling me that, yeah, price is done with this manipulation and we're going to go back to its intended direction. So, yeah, we got in and it was towards the end of the London Open that I entered this trade. And, yeah, that was a 2-to-1 trade, and I was happy about. Now the next trade, and I'm definitely not happy with this. This is a loss I took with Euro and the USD. Now, if you watched my last weekly analysis, I said I was going to stay out of the dollar. I wasn't going to get involved, and I wasn't. But I was looking through charts on I think this was on Tuesday, and look at the CME consolidation, manipulation, price comes up, we break above the range, come down, see this rejection from the fixed value area high. Also, if you looked at the dollar index for futures, the scenario that I had mapped out, if I was to get involved, the dollar had broken the previous week's range, made new lows, and it was getting rejected from the previous week value area low. And because of that, I entered, even though I said I was going to stay out of the trading the dollar this week, and it was just more of an impulse trade. And I'm actually happy I lost it, because if I won, it would instill bad habits. And yeah, usually I'm very disciplined with my trades, but one time this month and one time last month, I take a trade that I haven't planned. And yeah, this is the result. And before I go on, actually, I don't want to go too much into the dollar today, but I'm just going to talk briefly about it. You can see commercials, they're still heavily bearish, and retail are still at bullish, but like they've closed some longs. But open interest still increasing. And for that reason, and this week, I will definitely not get involved with the dollar, because commercials bearish, open interest increasing, while most currencies are open interest is still extremely low. I don't want to get involved with the dollar and shorting until I see open interest drop. Simple as that. So if I go back to this, and you can see here, my last trade was GBP Canadian dollar. Now, this was actually a CME or a CRC, whichever one you want to think about. Bigger range. Then we had the manipulation. Price came up above, made new highs, came down, rejection. I entered. Now, I did close this at like 128. I saw price was getting like tapped at resistance, and I was worried about just like a sharp downside. And yeah, I closed at 128, and it was the correct decision because it did go down after. But yeah, in ways I should have kept the trade to 1 to 2 as well. But yeah, it's I'm not going to trade perfect every time too, but overall, I was happy with this week. I was up nearly 3 or this week. The only trade that I lost money in was a trade that I didn't have mapped out in my plans. And that's not a coincidence. That's happened time and time. And yeah, I need to erase that from my habits for sure. Like, it was just one time this month, one time last month, but it's one time too many. Now, this week, I want to go in briefly and just talk about the Australian dollar. All the other currencies are not looking too interesting at the moment, except the Australian dollar. They're still increasing short positions for commercials, and open interest is still dropping. And for my trades this week, I have actually, I'm looking at shorting the Australian dollar. That is the only one I'm looking at. And because of this confluence with the Australian dollar and the commercials, I just want to go a little bit deeper into this as well and just show you this. Now, you obviously know what's going on in the world right now, and every country is going to be affected by this fuel shortage and oil supply being broken down, but none more than Australia, because Australia imports about 80 to 90% of its fuel, and they get it from Asia, and Asia have cut off exporting fuel to every country because they have to take care of their own country, which is understandable. And yeah, for the coming weeks, months, yeah, it's going to be a really bad situation in Australia, unfortunately, because I lived there for 2 years and I don't want to see the place getting that bad. But yeah, it's not looking good there at the moment. And yeah, you have to remember as well how crucial fuel is in Australia, because just think of the farming industry, and just about like they're driving trucks all the way across the country. And yeah, it's just like, if there's no fuel, it's going to turn into a absolute disaster in Australia. But yeah, that could happen. Like, this is not a timing tool. This is not like, okay, this is going to happen next week. Not saying that, but I'm just saying, with this information on top of the COT data, and yeah, I have 3 currencies that I'm looking at against the Australian dollar, but my main confluence is the weakness of the Australian dollar, not necessarily about the strength of these currencies that I'm going to mention. Now, one more thing briefly I want to talk about is, this is GBP. This is a mistrade from last week. When I go through it briefly. Now, you can see here we broke up above this range. You can see this right here. And let me just go in here. I missed this trade because this happened Asian session, which I wasn't able to get involved with. But I would have been looking for this and stop loss, go to fix EOC. And I would have just been looking for a simple 2 to 1. That's all I would have been looking for. But you can see what happened. look how much price went up. And just want to talk to you about this briefly. This was over 200 pip move that happened on Wednesday morning. Now, I just want to talk briefly about these trades, and okay, I'm just going to erase this here, and okay, because last week I went through this, and I just going to do just very briefly. Last week I was looking to break this structure for GBP Australian dollar. Once we broke above this earlier previous Sunday open, I was looking for opportunities. And on this one on Wednesday, yeah, that would have been just a beautiful move. Now, you can see here as well, the other trades I took was GBP Canadian dollar. And same thing, we broke above this structure that we were in for the previous 3 weeks. And once we were up above here, I was looking for long opportunities. My preference was price to come down to daily demand and price to go up. Didn't happen, but I saw CME pattern forming and I got involved around here. And the other trade, Australian dollar, New Zealand dollar, and I talked about this last week as well. Once we broke below this structure and between daily support to resistance, and you can see price went down, and yeah, we got the CME here, Trump's tweet, and yeah, price just went down. I'm not keeping this in my watch list this week. I'm not a fan of the price action. Yeah, we made new lows, but we've been making higher highs and higher lows since, and we have this daily demand just here. So I'm just going to monitor Australian dollar, New Zealand dollar for next week. And this was the only thing I didn't trade last week. I had 4 pairs and I didn't trade this. Why? It's for our demand held. I was looking for a break below this 4-hour demand, and I would have preferred a retracement back to this fixed value area low and to bring it down to daily demand. But if there was no retracement, if we were just trading in this zone here, I would have looked for any CME or CRC patterns. This would have been a tradable zone. But while we're above this 4-hour demand, I have no interest in getting involved. So that is my thought process from the trades last week. Now I just want to go in here first. I have 3 trades that I'm looking at, and I'm going to go through them briefly. This is Australian dollar and Japanese yen. You can see here, we are still, look at this structure. So yeah, it's clearly bullish. We have to make a new highs, but you can see this sharp downside in this candle. That is, okay, actually, my bad. 3 month, yeah, same thing, yeah. 3 month and resistance. Okay, now if you go to the monthly, and yeah, as I said, you can see we made new highs, price came down, and if we go into the weekly, I can see the weekly here finally had a bearish candle. Now, I also have my weekly supply here, our weekly demand, the key area to look at right here for that sharp to the upside of a month and a half ago. That's my weekly demand right here. We go into daily. Now, what I am looking at right here, you can see this daily demand right here. Now, this is a key level of interest for me right now. As you can see, we're getting rejected. You can see that first rejection, how much price went up. And you can see the second rejection. We don't know yet. We don't know what's happening. But if we go into 4-hour candle, and the only setup I am looking at for this, and this is my fixed range inside this daily demand. And what I want to happen is have our fixed value area low. And what I want to happen is price break this demand, come back down. We have to see it retracement back, and yeah, I want to take this to daily demand. Now, this is not much of a trade zone, so if we don't get a retracement back, I will leave it. We're too close to demand, and yeah, for this trade, this is not like a huge trade zone looking for CME or CRC patterns. So this is the only trade opportunity I will look for: retracement back to the fixed value area low and take it down to demand. So that's the only thing I'm looking for Australian dollar and Japanese yen. And this will be a low risk trade as well, because you cannot deny this structure that we're still in. Look at this. It's still in bullish structure. So this is more aggressive trade. So I'm going to manage my risk accordingly. And that is the only thing. Now, I forgot to talk to you actually about the DOT data for the Japanese yen. And this is the reason why I am interested, is you can see for the Japanese yen right here. Now, yeah, while we did close some long positions, we are still a bullish extreme. And retail getting bullish, that doesn't mean anything to me. Retail with Japanese yen, relevant. And open interest increasing a little bit, which is encouraging. And this trade is more based on COT data, but obviously the technicals aren't aligned 100%. So that's why I just have one setup planned for that for next time. Now, if we go into, that's the first trade I'm looking at. If we go into the next one, and I'm looking at Australian dollar, Swiss franc. Now, let me just talk about the COT data first for Swiss franc. Now you can see here, go down here, we're increasing, some long positions were opened up, and yeah, you can see as well there's a small increase in open interest. And you have to remember as well that Japanese yen, Swiss franc, they are safe haven countries. So with all this geopolitical events around the world right now, it could be like you could see price being very, like Swiss franc and Japanese yen being bullish next week, but we don't know. We don't know for sure. We're just here to look and anticipate. Now, if you go into right here, so the COT data, it's not as strong as the Japanese yen, but what I do love about this is just the technical analysis. That's why I included this. So yeah, while price has been going up, you can see we're still clearly in a macro downtrend. And I want to mark out some very important levels right here for you guys. And see, this is the 3-month supply right here. I have 3-month supply. And if we go into monthly, what do we got here? We have monthly supply. You can see how price is just closing. Show it. Monthly supply right here. Now, what you can see here then, we go, oh, actually, before we go into weekly, I want to show you guys this as well. The same for the Australian dollar or the Japanese yen. If you go into this valuation, monthly time frame, and you can see how we're still, like for the Australian dollar, heavily overvalued against the USD, while Swiss franc is neutral. And the same for Australian or for Japanese yen. That is just an extra confluence. But for I really like this for the Swiss franc, because you can just see we're in this macro downtrend. We're overvalued. We're coming into all these supply zones. And if we go down to weekly time frame, you can see this. I actually mapped out this a few weeks ago as well. We have this weekly supply right now. And yeah, you can see we're getting rejected from it. Now, if we go to the daily time frame, and see this here, daily time frame right here, and okay, you can see this. Yes, that's a daily demand, right? I'm not marking this out. It's not significant for me, and I will explain after why. But yeah, while you can see this trend, that's uptrend, and what I definitely want to see is a break below this daily demand, because that will be a break of structure, but it's not where I'm looking for my entry. I actually had this entry for the last 3 or 4 weeks. It hasn't been on my list, but I haven't forgotten about it either. And it is possible that we might see it happen next week. It is definitely possible. So you can see this here. This is the 4-hour demand that I have mapped out. Now, I explained this as well in a previous video, and I'll explain again because some people might be looking at like, how is this a 4-hour demand? Look at this green candle. This happened about 1 month ago when the Iran war started. We opened up with a huge gap below on the Monday. Quickly fills, and you can see how much this demand has been acting as support. It got rejected that first time. Look at that, shot up. The second time, and you can see we even made newer highs. So you can see we've had 3 rejections already. This is a key level for me, and I want to see this demand taken out before I look for any trades. That simple. We have our fixed value area low, and right here, fixed value area low. So pretty similar to the Japanese yen. I see a break below, retracement back, and look for continuation. But for this trade, if we don't see a retracement back, I would be willing to look for CME or CERC pattern if they develop in this zone. This is a tradable zone right here. But once we break this 4-hour demand, if we don't see a retracement back here, I will look for CERC or CME patterns in this zone right here. So that is Australian dollar and Swiss franc. And I will take you to my favorite pick, my favorite choice for next week. And this is my number 1 pick is GBP Australian dollar. Now, I've talked about this in my weekly analysis for the past 2 weeks. I'll go through it again just to show how important these levels are. 3-month support and resistance. We got a rejection from it. And go to monthly time frame. See the close above. Got this bullish candle, monthly bullish candle. Now, if we go to the weekly candle, weekly time frame, and want to mark out this is a very, very important zone right here. And we have this weekly demand. And I talked about this last week, how important this zone was. And you can see here, I said this last week because we had that rejection the first week. And I was very encouraged last week because we closed above the support and resistance and we made new higher lows. But that was a very big confidence. So I was confident going into this week about GBP Australian dollar. And yeah, you can see this big bullish weekly candle, the first one in a long time. So if we go into the daily time frame right now, and what you can see in the daily time frame, I can see we have this. We don't really have a demand zone. I would have this. This is the daily supply that I would be looking at. Let's look at this consolidation right here, the drop, and you can see this sharp rejection. So this is a daily demand zone that I'm looking at, and another that's daily supply. And what I am also looking at right now is this daily demand, which is in 3-month support and resistance. Now you can see this hasn't been tested yet. price was just consolidating, and we went up on, this is on Monday, and price hasn't came down here, but this is a key level that I'm going to be looking at. And I'm going to go to the 4-hour time frame, and what I'm going to mark out here are two critical zones. The first one, we have this 4-hour supply. Now you can see this here, and this is part of this bigger range as well. So this is key level to look at for take profit. 4-hour supply right here. And what else I want to look at is this 4-hour demand. You can see how price has been consolidating, but we haven't tapped into this yet. Now I'm going to map out a few scenarios that I'm looking at on Monday for this. Now, okay, we have 4-hour demand that's been formed here. Now you have to remember as well, we've broken above this structure. I want the price to go above this structure, which it has done. Now, what I would be looking for on that, you can see this fixed range right here. Now, what we have right here is we have fixed POC, which is sitting right in daily demand. This is a key level of interest for me. We also have this fixed value area high. Now, there are two scenarios I have mapped out for this. Now, the first one is we get for the 4-hour demand, you can see maybe this will be this is the best case scenario. We see consolidation, we see manipulation into this 4-hour demand. So consolidation, manipulation, wait for price to break above the range, and go up and take profit at 4-hour supply. That is scenario one that I'm looking at, and that could happen as early as Monday, depending. But the second scenario, and I'm actually hoping this happens because I think there's bigger opportunities. We break this demand, we go down, preferably get rejected from daily demand, or we could get rejected from fixed value area high. But when you do, and you just look for a break of structure, a sharp rejection, don't look for fake outs. It has to be a sharp rejection, and you can just look for a continued upside. Demand would obviously be taken out, and that's actually what I'm hoping will happen on this week. But for my 3 trades, I have 3 trades. I have Japanese yen, Australian dollar, and Japanese yen. One opportunity right here. That's it. Because there's not much of a trade zone here, so I don't want to be trading in this zone. Just this one opportunity that I would be looking for. Australian dollar, Swiss franc. Still has some work to do, but if I see a break below this, and if we don't see a retracement back, I would look for CME or CRC patterns in this zone. This is a tradable zone. Now, what's different with Japanese yen and Swiss franc is if the Australian dollar shows weakness on Monday, and if it's extremely weak, these are 2 trades that I will probably be looking at. Because if Australian dollar is weak, that means British pound's probably going up already. It's gone up. I feel it's overstretched. I need to see for GBP. I need to see a pullback. So if Australian dollar opens up strong on Monday, and I hope it does, and if we see a pullback to this zone, I would be very interested to get involved. But I also have this 4-hour demand as well, and let's see how price opens up on Monday. So one more thing, actually, I kept forgetting to do it the last few weeks. This is, I do just looking at the news for the week ahead, and you can see here, this is high impact news. Now for Australian dollar, key ones are Tuesday and Thursday, and we have the RBE meeting and balance of trade. So this is before Asian session. So if I'm in a trade the night before, unless I might break even, if my stop loss I break even, there's no way I can be in this trade because of these news events. Now we also have the Japanese yen on Wednesday, manufacturer index. So this is big news for that. Now also if you go into the 2 stars, and you can see here that we have BOJ on Monday. Let's look at for Japanese yen, and Bank of England consumer credit for GBP and mortgage. To look at that, and on Tuesday, housing prices as well for the GBP, and Swiss franc on Wednesday, and we have PMI retail sales. So they're just events that I will keep an eye on because they're my trades that I'm looking at. Now you know that I'm looking at four countries, and for trading economics, you can just go in here and you can just type in the country that you want. That's what I love about trading economics. So I'm just looking at these countries. So I just have these ones clicked. So if I was looking, just say example, if I was looking for euro and euro area, okay, type this in, save, and all the news for next week for euro will come up. So if you like the information I just gave here, not just about this, but about my trades for next week, please like and subscribe. And good luck trading next week. And hopefully it is another profitable week. Okay, thank you very much, and I'll see you for the next video.